As an introduction, just to give you an overview of the regulatory landscape at this point. So Bill Gates once said that banking is necessary, banks are not. And I think Brazilian entrepreneurs probably heard that because back in 2015, we had around 40 fintechs in Brazil, and 3 years later, we have more than 400. So it was a great development. The fintechs are mostly focused in payments, lending, debt renegotiation, investment advisory, asset management, data and analytics, and technology infrastructure. And it's interesting to see that even though we had such a development in the past 3 years, we still have a lot of opportunities in Brazil. As you probably know, the Brazilian financial sector is still very concentrated. So, for example, at this point, the 5 largest banks in Brazil are responsible for almost 80% of the credit in the Brazilian market. So we have a lot of opportunities because of that. And at the same time, they work with legacy systems, a very heavy technology that not always connect to the lighter systems that we have today. So there's an opportunity for new technologies to improve efficiency in the system. And the Brazilian population is still in a large portion unbanked. Not all the population has access to banking services, but at the same time, they are heavily mobile users. We actually have more mobile than people in Brazil at this point. So it's clear that we have still a lot of opportunities there. At the same time, we have some challenges. It is definitely a highly regulated environment. So we have both the Brazilian Central Bank and the Brazilian Securities Commissions looking at those activities, and most of them do require license in Brazil. There's discussions between traditional players and the newcomers, particularly on whether compliance requirements should be the same for both, and how do you share costs and responsibility between the newcomers and the traditional players. So a few challenges that. And the usual question is, how do regulators position themselves in this scenario? And it's interesting to see that both the Central Bank and the Securities Commission have adopted similar strategies. So they are trying not to put a lot of regulation and leave space for the market to develop. But at the same time, they have been following these developments very closely. So it's particularly interesting to see that the Brazilian Central Bank, who has traditionally been a very close regulator, is now very open to the market and trying to get input from the players and also from newcomers on how regulation should foster competition and help develop innovative solutions. In the past, if you were a bank in Brazil, you might get a meeting with the central bank. Today, if you're a fintech and you want to have a meeting with them, all you have to do is call, and you have 10 people in the room the next week. So it's definitely a change of position from the regulator, and it's a very positive one. So in terms of regulatory changes that have been that we have seen in the past 2 years that I think affects fintechs directly, we have some changes related to the digital banks. So simple measures like allowing banks to open accounts through electronic channels only. That created the possibility for banks to operate 100% digitally, which was not possible in the very near past. At the same time, in the payment sector, we had a new regulation. I would say we had actually waves of regulation. The sector started being regulated in 2013, and the regulation has changed significantly in the past 5 years. And it's interesting to see that what we have that is more close to a sandbox in Brazil is in the payment sector. So if you are a payment institution, even in case you are doing a regulated activity, you wouldn't need a license until you reach certain thresholds in terms of volume of your transactions. So then the central bank gives some space for these entities to start their business, to test their products before they need to comply with a very burdensome regulatory environment. But I think the main regulatory change that we have seen in the recent past was back in April this year, when the central bank created 2 new types of financial institutions. Both of them focus on credit, what we call the credit fintechs. One can only provide credit using its own capital, and the other one is a typical peer-to-peer platform. And it's very interesting to see that the regulatory burden imposed by the central bank on this entity is lower than in the traditional players, and is compatible with the type of activities that they are allowed to perform, which is also much more limited. And we had a presidential decree allowing non-resident investors to invest in up to 100% of the capital stock of this type of entities. I'm not sure if you all know, but in order for a non-resident investor to invest in the financial system in Brazil, you need a special decree from the president allowing that, which is costly and time-consuming process. So this was a clear indication that Brazilian regulators want to foster competition in this sector. And the question that remains is, what is yet to come? And I think we have a lot on the pipeline. The central bank announced that it intends to make open banking mandatory in Brazil in the near future for both the payment and the financial system. Fast payments are definitely a trend, and we will see something around in this field also. And from the CVM, cryptocurrencies are a huge discussion, and also ICOs. So we probably will have news on that. So a lot is going on. I think we have a more positive macroeconomic environment at this point, a lot of confidence with the new government. So this definitely will foster even more the landscape for fintechs. And hopefully in a few years, we will not be talking about a few hundred anymore, but a few thousand. So with that, I would like to give the mic to Sandro, who will talk a little bit more about the fintech.
Thanks, Larissa. So good morning, it's nice to meet you all. I'm going to backtrack a little bit to the story of Geru. We started the business in 2013. At the time, all my friends in the financial market, private equity firms that I worked in priorly thought I was crazy. The term fintech was not yet as consolidated as it is today. And we wanted to be the first online lender in Brazil. And regulation was really painful. A company had attempted to put together a peer-to-peer operation in 2010, and it was shut down by the central bank with the federal police and the public attorneys. There were pictures on the papers, and some nice people's reputations were destroyed. And I walked up to José Eduardo from Mattos, Filho, who's been a friend and someone I worked with a lot in my past as a private equity guy. I told him I wanted to do this. There are many companies doing something similar to this in the US and the UK. And I don't want to get arrested because I have a good life, I have kids, etc. I really don't want to run the risk of being put out of business for no reason. I'm willing to go all the way. So if it costs a lot to do this, let's do it. But just bear in mind that no one that does this is a bank anywhere else. So I don't want to become a bank just because it's the easiest way to do it. And we started a great conversation. It took us about 6 months to put it together. In 2014 we were convinced that we had put together something that would work. Then I had to put together a team. I joined Karen, a data scientist that worked for over 20 years with modeling in financial institutions and bureaus. I brought also Tomas, who's a brilliant software developer, and together we started building the platform. We started operating in 2015. It took us a long time to build the entire platform because of some of the limitations of the Brazilian environment. So at the time, we didn't have banking as a service. We didn't have the data gathering tools that are currently available. We didn't have the payment infrastructure that is currently available. And we had to build everything from the ground up. We had to build the rails to run our train on, and that was really time consuming, but ultimately created a platform that is very interesting in the sense that it works from the both ends of the credit cycle. So what we do is personal unsecured loans. We offer them through a digital platform nationally in Brazil. Application process takes about 3 minutes. You get an immediate response, and you take a picture of yourself, of your ID, of your proof of address, and you're done. Then we run some background checks, and the next business day, cash gets disbursed to your account. We fund these loans through a securitization company. The securitization company has been issuing securities in Brazilian debt capital markets since 2015. We just closed our 7th issuance of the ventures or notes in the Brazilian capital markets for 240 million reais. The previous one was 230 million reais, and the one before that 150 million reais. The company has been growing threefold every year, which is a good equation because it gives us enough time to feed back the data, the performance data into our models and learn a little bit before the next growth stage comes up. I think we were very active in building the new regulation together with all other market agents and the central bank. It's for me personally and for I think the industry as a whole, it's a very big accomplishment. I remember when I've worked with regulated industries before in my life in other sectors, and I knew for a fact that I could not ask for a permission from the central bank to do what we wanted to do, because if I did that, I would either get one of two responses: no, you can't do it, or let me check. Right, and neither of those worked because we needed to get our business up and running. So we decided to work very hard to get something that was bulletproof. And we immediately after we launched, I took a plane and I went to the central bank to present the company and what we were doing, because we didn't want to be seen as irresponsible or unresponsive to regulation, right? I remember the first meeting I had in the Brazilian Central Bank. There was two technical guys, and they were afraid. They were back against the wall, kind of watching as I presented and showed the flow of a loan. And when I was done, they said, "Do you mind presenting that again?" And then they brought another 5 people into the room. And then when I finished, they asked me, "Sorry, but could you do it one more time?" And then they brought like 10 people into the room. And finally, at the end of that meeting, people were discussing amongst themselves and saying, "Well, this is actually better KYC than what the banks do. This is actually completely okay. It's not. There's nothing wrong with this." And a few years later, maybe a couple years later, the central bank started calling us and saying, "Listen, guys, we want to get closer to what you're doing. We want to understand the role of your partner bank and what they do for you, and how could we help in that process." So yeah, I mean, I don't want to extend this introduction here, but I think the environment changed a lot. That's just to say that when we started, it was just a couple of companies. In 2013, it was maybe 5 fintech companies in Brazil. By 2015, they were 40. It's really something to see that investors are starting to realize that Brazil is probably the most underrated opportunity in fintech in the world.
It has definitely been a great pleasure to work with Sandro through this process. It was a challenging one, but the results are very, very good. And Sandro is definitely one of the people that is changing the landscape for fintechs in Brazil. Alex, if I think you could talk a little bit now, as Sandro mentioned, Brazil can be considered underrated in terms of investments at this point. So can you tell us a little bit about your experience in investing in Brazilian startups?
Sure. Can you hear me okay? It's working? You're not? Better now? Yeah. Well, hi everyone. Thank you for having me. Thanks Larissa and thanks Ted for setting this up. It's great to see so many people here interested in Brazil and fintech. I think it's a sign of the times. So it's good news all around. My name is Alex Porto. I'm a growth investor at Riverwood Capital. We're a global growth private equity firm based here in the U.S., but we've been investing in Latin America and Brazil for the last 10 years. It's around a third of our business. Over the years, we've amassed a portfolio of 14, 15 portfolio companies, investing through the cycles, peaks, valleys, challenges, and moments of triumph. The region's been good for us, and we're thrilled and happy about the franchise that we're building in Brazil and Latin America. So I think, the way that Sandro positioned it, I would really echo a lot of that. Fintech is a sector that I've spent most of my career looking at on a global basis. When I joined Riverwood in 2013, that wasn't really a term that was thrown around much, and particularly in Brazil. This is a market that, especially on the payment side, was coming from a world of a duopoly. Multi-brand was a relatively new thing, and the market structures were changing. Banking concentration was very high, and still is very high today, but there was a small little company and a former private equity and venture capital investor by the name of David Velez, who was just getting started with this crazy idea at the time. And I think that was one of the first meetings that I took when I was at Riverwood, looking at investing in Latin America and Brazil in fintech and payments. What I can tell you is that since that time, 2013, 2014, I can echo the sentiment that the market has really started to take off. I mean, you think about some of the recent IPOs that have happened this year of the neobanks, challenger banks, or some of the highly publicized capital raisings of like a new bank, and some of the challenger banks that are raising in the private markets. It's all pretty exciting and all really encouraging for investors that might not necessarily view Latin America and Brazil as a core geography or a core part of their thesis. So, as we look at kind of capital flows going in, that's pretty encouraging for us because we typically come in at a later stage than your venture capital and early stage startup investing. We're trying to deploy 20 up to $125 million of equity capital into companies, and those are typically minority investments, although we can do control investments. So you get to a sense of the size of the companies that we're looking to invest in. So that's a little bit about who we are and what we do. And I would say, Fintech in Brazil has been quite good to us. In 2014, we acquired this, at the time, small company called Conductor, which was a company that had existed for a while. It had a track record of 15 years of providing issuer processing and merchant processing services in the payments side of Fintech. And we acquired that business and partnered with the CEO. And what I can tell you is that since 2014, that company has grown by a factor of 4.5 times. And it has been emblematic to us of a lot of the excitement around fintech, because as an infrastructure software provider, most of the fintechs that are neobanks or challenger banks are actually on our platform. Some small and mid-sized banks are on our platform. Public companies are on our platform, and so we actually get to see a pretty interesting swath of the data of the different portfolios and the different growth rates. So it's actually quite interesting for us because we actually use that as a little bit of a barometer internally as we think about fintech investments. So, that's a little bit about us and how we look at this market, and looking forward to keeping the conversation going.
Thank you so much, Alex, and it's great to hear you talking about Conductor. Definitely, payment processing is something, it's kind of a hot topic in Brazil right now. We have a lot of development to do in this field, and this is certainly a great opportunity for investments. And I think all the technology that is now applied to the financial sector is changing significantly the way that the players operate, and artificial intelligence is going to be a huge component of that. So Terry, please talk, let us know a little bit about what is happening with artificial intelligence and what we should expect as a result of that.
Sure, thanks very much. I'm going to stand for two reasons. One is I can then see the slides, and the second is we can annoy the cameraman. He's going to try and follow me as I wander backwards and forwards to see the first slide after this one. That's great. So it's been said that about half of the people on the planet are terrified of change, and that almost the entire other half can manage change, they're okay with it, perhaps some of them can be project managers of change, but there's just a very small minority who are crazy enough to know that if they deliberately make change occur, that destabilizes everybody else and gives them a competitive advantage. A portion of those people go into fintech, but let's make no mistake that within the banks, and there are a number of big banks here present, that there are agents of change who are fighting back. And the greatest opportunity for them to do that today is artificial intelligence. Now, why is that coming about? It's coming about because of what we call digitalization. The world has changed. In the days when Ted here was a young man and would wander into a bank and ask, please, can he have a bank account? Perhaps the bank manager might have asked who his parents were. In my case, they asked my father to sign for it. 3 years later, they asked if I would like a credit card. Can you imagine that today? Today, someone goes into one bank and they say, I want a checking account from you. And they say, would you like a credit card? No. I want this credit card from this bank because that's going to get me into the lounge. And I want my loan from these guys over here because they've got the cheapest rate. And so as individuals, we now build our community experience based on what we want. So for banks to maximize our loyalty and our share of wallet, that's very simple. All they need to do is build a computer system that is entirely unique for me, and another one for you, and another one for you. It's pretty expensive, right? It's not going to work. So the process is to build a computer system that can predict what it is that we want in advance, tell us what it is, present it to us before we go somewhere else. And that is what digitalization is. In fact, if we can go to the next slide, this is becoming so important for banks that there is an arms race going on. JP Morgan alone, in the last 2 years, has spent $20 billion looking at their data, organizing it, and building algorithms to move themselves towards digitalization. Now, when I spoke to them about this, and I said, well, why would you spend that much money? Because it's the new Uber. To which my response is, Uber has never made any money. And at some point, a little kid's going to see them walking past and say, they've got no clothes on. Before we make these investments, we must understand what they are and what value they will bring. So move on to the next one. So how do we do that? Well, the first thing we need to understand is what is artificial intelligence? And it is, in fact, very simple and very easy. It is only one thing. Artificial intelligence is a prediction. And when we understand that it's a prediction, then we can understand how we fit that into our business model. We do it like this. We start by looking at our key processes. Perhaps for our banking world, we're a capital markets firm. Maybe that is foreign exchange, front to back. Within that process, we can then break it down into its workflows. And within those workflows, we can identify where a prediction might occur. And once we can see what a prediction, where the prediction is, we can then ask ourselves the question, if this prediction was done by a machine, which can do it with much more data, much more history, and far faster than a human, will I or will I not get a better prediction and a better outcome than the humans that are doing it today? So we identify those predictions, and then we need to do one other thing. Let's just move forward one more. We need to understand what we're training that prediction to do and what value it's going to have. And what do we mean by that? Well, just because there's a prediction doesn't mean that it's very simple. Prediction engines work on data. And the reason why banks have a distinct competitive advantage over the new upstarts within the fintech industry is that the banks own 30, 40, 50, 60 years of data that fintechs do not have access to. And I'm sure there are some legal questions we can talk about around who owns the data and the outcome. So if we have a problem, we then look at that problem and its prediction, and we ask ourselves, how are we going to train our prediction? And let me give you an example. Let's imagine that I was to build an artificial intelligence engine that read all of the CVs that I've received, looked at all the people I've employed in the past, and predicted for me who from those CVs I might employ in the future. Make sense? Sounds like a good use of artificial intelligence? Yep. Except for some crazy reason, I've always employed people who are under 4'2". Do you know what the artificial intelligence engine is going to do? It's going to find all the people under 4'2" and tell me that they are the people I should employ. Why? Because I've trained it on my bias. What if I was to ask it to look at the people who have been in my company the longest and have been promoted the fastest, and to identify those characteristics in the CVs that I've received and match them? Will I get a better result? How we train our prediction is exceedingly important. But it is only a prediction. And this is where we need to understand the difference from a regulatory perspective. You cannot audit and you cannot do regulatory control on artificial intelligence. Why not? Because it's not a set of rules. You can't put a coin in at the top and determine where it comes out at the bottom. When you create an artificial intelligence prediction engine, at the point of birth, it is literally like a child. It knows nothing. And we train it with 50 years of data. But just like us, I can't audit your brain or yours. But what I can audit is what you did with the prediction that you had. And those outcomes are different. Now, let's just try it very, very quickly here. If I was to tell you that there is a 64% chance that it's going to rain tomorrow, how many of you would bring an umbrella? I would bring it. That's interesting. There's only 7 or 8 of us here who would bring an umbrella. If the prediction's the same for all of us, and yet our judgment of that is different. How we take the prediction and we use that prediction in an automated way if we want to, or if we have a human involved, we can audit the judgment. Once we've made a judgment, we can then take an action that will give us a result. From that result, we learn something, and then we're able to train our prediction engine over time so that the percentage prediction gets higher and higher during the course of the usage. Let's just move on pretty quickly. There are 2 stages that need to be done before we build anything related to artificial intelligence. The first, and it's essential, is not to spend $20 billion just because we think it's an arms race, but to use a mathematical means by which we can look at the potential value that a prediction will bring within a process inside our business. We do that as a company using our own model of a risk-adjusted economic value add. That respects the fact that artificial intelligence is not right or wrong. It is what? It's a prediction. It's a percentage probability that something will happen. So the investment must be based on that prediction being correct or incorrect. We then need to do a technical validation. Can we code it? Do we have enough data to train it? Is that data structured or unstructured? Can we get hold of it? Once we've done that, just move on, we can then build a prediction engine, preferably using DevOps. And do you know how long it takes to build a prediction engine? You're going to be shocked. The vast majority are completed within 2 weeks. Several of them are done within 3 or 4 days. It's actually not that complicated. But here is what is complicated. Once we've developed it, we can just move on, we then need to train it. And it is the training that makes the difference. So as we feed the data through our engine, we can see whether it's hitting a 60, 70, 80% accuracy. We can add more nodes if it's a neural network, or layers if it's an LSTM, more features. We can add weightings to our features and try and get that prediction as high as we possibly can. Once we've done that, and we have an engine that is performing reasonably well, we can put that into production alongside an existing process as a pilot. And once we can see the value, we then take the existing process away, we leave the automated prediction process in place, and that moves us closer and closer towards a predictive model, which is what digitalization is all about. Now, we're doing some of this here in North America, we're doing some of this in Brazil. Why is this interesting here in this context? Because in order for us to train our models, we must have the data. And fintechs have been disrupting the world for a long time. However, fintechs do not have and cannot own the 50 or 60 years of data that banks own about our experience. Where that has been done before, Mark Zuckerberg has ended up in front of the government. And today, I believe, the head of Google is sitting up at Capitol Hill trying to explain what's been done with his data. So we can, as fintechs, put our artificial intelligence modules inside a bank. We can train them on bank data and we can produce an outcome. And our model learns from that outcome and becomes more valuable over time. Just as a final thought, given that that model has been perfected because of the data provided by banks, who now owns the perfected model?
I have a few questions for all of you, but I would also like to invite you to make all the questions you want, and so please interrupt us and we can start the debate. So I think Terry mentioned a clear competitive advantage that banks have when I think about artificial intelligence. Sandro, I know that fintechs are in several cases competing directly with the banks. What would be the fintech's advantages in this case?
I think what Terry was just talking about works for both ends, right? One thing is to predict what the customer wants, and the other is to predict how to fulfill that demand. The fintech companies have the advantage of being very focused. That's my view. So one of the things that we work with models all the time, and we are quite aware that we don't have enough data to run AI. So we are one of the largest companies doing this in Brazil, but we still don't have enough data to run predictive models using AI techniques. But we can use other techniques and design and experiment around the customer experience. And when you find what the customer wants, you can improve and adapt to it. I don't think there is any informational advantage for being a fintech. Maybe with the open banking initiatives, this will change a little bit, but still there is no guarantee that you're going to get 60 years of data. You may have 2 or 3, and you're not going to be able to access data from clients that are not engaged with you. So I would argue that the banks still have an advantage on that end, and will always have. On the other hand, banks are structures that are used to making profits. They have incentives within their ranks that don't go beyond 2 or 3 years. I've been interacting with banks. We partner with a couple of banks in Brazil, as you know, they are slow. They are technologically inept. Although there are some smart people doing smart stuff somewhere, it doesn't really connect to the entire infrastructure of the bank. They have a bunch of conflicts within their channels. The sales people don't agree with the treasury people, that don't agree with the modeling people, and everyone wants to be safe, so everyone has margins of confidence in what they do. So banks are really not very assertive in making moves, and fintech companies get to do that. It's much riskier than running a bank, that's for sure. But we are nimble. We have that in our side. The other advantage I think is worth mentioning is that people really hate banks. And when you walk into a bank, you really don't want to purchase anything from the bank because the bank has been pushing bad products over 60 years. And the only data they have is the data on bad products. NPS scores of banks are super low. NPS scores of a good fintech are super high, typically. I think ultimately some of the banks will be proposing to their clients that you choose products from an open platform, and that's where I see it go. My personal opinion.
And it's actually interesting to see that most banks in Brazil, at least the largest ones, now have their own incubators and accelerators. So they realize that technology can have great impact on the way that they do their business, and are trying to foster it in a manner that they can benefit for new ideas, new business models. But as Sandro mentioned, there's not the people in general don't love banks that much, and I think consumer experience, which is now something we will all think about, has not been a value for the banks in the past, and probably because of that, there was this gap in the financial services industry. Do you think, Alex, the fintechs came to fulfill this gap and create other opportunities for investments and for new services? And how do you perceive that as an investor and in startups?
Yeah, So the short answer, I think, is yes. What we're starting to see in this sector, as I mentioned before, is full cycle investing from investment all the way to partial or full exit. And so that is something that is very encouraging for venture capital growth and private equity and ultimately public market investors. I would say for us, when we think about the payment scheme, when we think about where banking is moving in Brazil, I would say, to the extent that there can be open banking as a service, some amount of information sharing, I think that starts to level the playing field a lot. For sure, I think fintechs have a razor focus on customer experience, which is, as Sandro mentioned, it's just something that's fundamental. People don't, in the past, people would tolerate bad experiences. People don't tolerate bad experiences anymore. So, I think that's one fundamental advantage. And another is just on the customer acquisition side. I mean, they're not saddled with a massive agency network, a massive branch network that they need to continue to invest in, revitalize, and figure out what they do with that. They can focus on the most productive channels to invest in without having kind of some cost fallacies that they need to continue to rationalize. So for us, as we look at payments, one of the next frontiers that we're focused on, not just in Brazil but globally, is on B2B payments and what types of rails will get built there, and how can companies build interesting platforms there. It's something that Visa and MasterCard globally are extremely focused on as part of their digital agenda. And it's something that a lot of investors globally are focused on, and I think that's probably one of the next tea leaves that's going to turn over in Brazil is, people are investing heavily into consumer financial services and merchant processing, merchant acquiring right now. And I know there's some smart people in this room thinking about, how does the merchant acquiring, merchant processing world evolve over the next 3 years with all these companies, with all this capital? So actually one of the areas that we're focused on a lot right now is trying to figure out how do B2B payments, business-to-business payments evolve, and what opportunities do we see in there? For example, just anecdotally, we have, again, going back to one of our portfolio companies, Conductor, they're launching a banking as a service platform for payroll, prepaid debit, things that have been in Brazil. Typically, a direct deposit account is linked to a large bank, and we'll see what happens with that over the long haul. In the U.S., direct deposit accounts are pretty important, and once you get a banking as a service platform that can start to get those hooks in, that's when you can start to have some interesting viral coefficients, because I think one of the challenges that a lot of fintechs have, not necessarily just in Brazil, but just globally, is that you get a lot of comparison shopping, and a lot of people will be trial users and kind of transacting once or twice a month here and picking and choosing. And how do you do just that, where you can show impressive growth, but ultimately a bank makes money because it's cross-selling a vast swath of products and some more profitable products? I think that's one of the areas that for us we continue to investigate in Brazil and globally, is how do you drive repeat usage and increased usage so you can drive increased profitability. So those are a couple areas for us.
So open banking will definitely be a game changer for that, particularly because the way that payment transactions are initiated may change significantly, as we are now seeing in Europe. And you both mentioned the different perspectives, the consumer perspective, the consumer experience, and how you have to be careful about that when you provide financial services. And I think artificial intelligence may help the players in providing better services. but I believe there is still some obstacles related to the adoption of this technology, right, Terry? What would you say it's why we are not? What would be the greatest challenges in relation to the adoption of artificial intelligence in the financial sector?
At the moment, artificial intelligence has really been focusing on three key areas. One is called NLP, that's natural language processing, the ability to read documents or to make translations or to hear a voice. The second is what for me is a very simple classification issue, and that is looking at transactions and finding out which ones don't classify correctly and therefore can be an example of fraud. The third, which is related to CRM, is one that I prefer to call materialism, and that is simply being able to try and predict what somebody wants to buy next or what service they require next, and to encourage them to spend more and more money on doing that. And that, for me, is getting out of hand. In fact, there are some trials going on here in the US at the moment where Amazon no longer wait for you to order. They actually drop boxes off at your house and you open them up, you see whether you like what's in it, and if you do, you keep them, and if you don't, then you send it back and they drop some more off the next day. That is the height of consumerism. It's what artificial intelligence for me should not be about, which is simply materialism, and I hope that we learn from those experiences. When we move outside of that, we ask ourselves, well, where can artificial intelligence really help? The financial markets are driven, for a large extent, by emotion. They're driven by greed, they're driven by fear, and they're driven by hope. Those things have created tremendous undulations within the capital market structure at several times during our lifetime. Where we look at predictions that can be done by a machine without those emotions involved, and we use those predictions over a reasonable period of time, it is possible that in time we will be able to see far more stable markets which do what markets are supposed to do, that is to invest for value. But we can't do that at the moment for two reasons. One is that actually is an antithesis of the greed that drives people's salaries within financial markets, and that's a problem that really needs to be addressed. And the second, excuse me, and the second reason is that technically it is quite difficult to have predictions within the financial markets, particularly in capital markets, that do not require what is the utopia of all artificial intelligence predictions. What is that? What is the stock market going to be like tomorrow? If we can know that, then we will be billionaires. It's actually very difficult to do. As a company, we've been playing with this now for about 9 months, and we managed to get a 55% accuracy rate, which we are terming a guess, because frankly it's no better or no worse. So we have to look at what predictions we're doing inside capital markets in particular, and whether those predictions continue to drive the sort of greed we've seen before, or whether they help us move towards a more ordered, structured environment.
And Sandro and Alex, perhaps you could talk from the perspective of the entrepreneur and also the perspective of the investors. What do you think are the challenges that we still have for fintechs in Brazil?
Right. So I think that in Brazil we have a few structural issues that are worth mentioning. Maybe some here will know all about it, but I'll run that risk and try to go through a couple of those. One is that it's a banking oligopoly. So 5 major banks control over 90% of financial transactions. And there's nothing wrong with the bank's behavior in the sense that they behave according to the law, but ultimately the incentives for putting data out there and for competing with each other in the open market, offering cheaper products, is not really there. The other thing that I think on the capital market side is that it's an illiquid capital market. So you can place the security in the Brazilian capital markets, as you know, we have been doing this, but you cannot sell. It's all buy and hold. There's very little liquidity. There's no secondary market for bonds. except if you're Petrobras or like a really big company. And that's also a limitation that fintech companies have to deal with. The other thing is that we have a very poor credit data system, both for companies and for individuals. There have been discussions regarding positive credit bureau and open banking that are evolving and will change that landscape. But those conversations, not open banking is more recent, but if you go back to the positive credit bureau, this has been in discussion in Brazil for over 10 years. It's ridiculous. Brazil does not have a positive credit bureau. There is no national credit score. You don't have the full track record of a person when you go to a bureau. So Experian is in Brazil, Equifax is in Brazil, TransUnion is in Brazil, and they can't provide real good predictive data. Of course, there is for a major bank, and I know some people here work at these banks, but for a major bank, there are really no incentives to go out there and just put all your data out to the market so that everyone can benefit from it. And the credit bureau is just I think when Terry talks about AI, he's talking about much deeper data than just if you paid on time or you didn't. But even that data is very powerful, and it's not out there. So that's one of the main challenges I would see, especially in our market. Of course, distribution costs are ramping up as 1,000 fintech companies go into the market, and everyone thinks that lending money to consumers is a very profitable business. Our cost of advertising goes up, and that will happen to everyone. And although the last one I would mention is that although we have seen some good evolution of the regulatory framework, overall the legal system is very convoluted in Brazil. So you don't really know what to expect next. Going back to the Positive Credit Bureau, that has been in discussions with the Congress for over 5 years, and sometimes it looks like it's going, sometimes it looks like it's not going to move forward. And in the judiciary system, you have ridiculous claims that you have to fight in court in 3 different stages, if you're lucky, right? If it's not more. And if you're doing a small transaction, those costs are unfeasible. So transaction costs are really driven up by legal requirements, and that's something that we need to look into in much more detail.
Yes, I think one of the initiatives that the central bank is trying to move forward is actually to become to have more efficiency in the financial system, and definitely that would have to deal with all those issues. But Alex, from the investor's perspective, okay. From the investor's perspective, do you see the same points being, the challenges, or do you think there are others?
No, I couldn't have said it better myself. I don't really have much to add to what Sandro just mentioned. Those are, if you're playing in and around the banking sphere, I think those are the salient points, and those are the things that when we talk to entrepreneurs, those are the heartaches and those are the tribulations when you actually make some progress on some of those. That's when you start to see, kind of exponential changes and step function changes when you can solve for partially or all one of those items. So, not much to add there.
And Terry, I think what Sandro mentioned in relation to regarding regulation also affects and artificial intelligence. You have some challenges. You mentioned one, like who is the owner of the results predicted by artificial intelligence. I think we have seen regulation across the globe related to the data that is used on those processes, but not the results itself. So do you see disputes around that as the regulation still something we'll have to deal with in order to foster the use of artificial intelligence?
There are two areas that regulation is going to be a challenge. One is with regard to reporting and compliance. As I mentioned, we try to overcome that problem by looking at artificial intelligence only as the prediction. And then to ask ourselves, based on that prediction, we then need to make a judgment. Now, we could make a judgment. For example, if we were building an artificial intelligence engine that would answer the question, if I lend $100 at 10%, what's the probability he's going to pay that back? If that probability is going to be higher than, shall we say, 85%, then I might just want to automate that. But that's a conscious choice. So that from a regulatory point of view, we could say, well, based on that prediction, I can now see the decision tree that was made, the economic decision tree as well. If the probability, and forgive me, Ted, is less than 60%, then I might want to have a human involved in that process. Is that me?
I'm not sure.
There you go. So by dividing out the prediction itself and the action taken because of that prediction, then we do have an audit of the process that over time the regulators will begin to understand that can be used from a compliance perspective. The other thing comes back to not so much a regulatory point of view, but a legal point of view. Who will own the intellectual property at which point? So the data, well, who is the data owned by? And increasingly governments are moving towards a concept that says it's not even owned by the financial institution, it's actually owned by individuals. GDPR and others have come in different countries to try and ensure that we as consumers have the rights, almost exclusive rights or shared rights of that data in many instances. The artificial intelligence code, as I mentioned, so it's actually very simple. We can copyright that, we can put little notes inside the code saying it belongs to us, but of itself it's of minimal value. Once it's been trained to produce a minimally viable product, and once it's been in production and been working with production data, then it learns over time, and the more it's used, the higher its accuracy rate is. The outcome of that as to whether we're going to use that prediction for a judgment that will then lead to a loan will belong to the client. But the enhanced, because it's been inside a client's environment, the enhanced learning that comes from that, we would see that organizations who are fintechs within the artificial intelligence area will be putting into their contracts that belongs to us and not to the bank. But I'm pretty sure that's going to be a very interesting legal battle over the course of the next 5 years.
I definitely agree, and together with that, we'll probably have some disputes around liabilities coming from the results or how the results were used and decision making around that. I think that will be my last question. So if you have questions from the audience.
You mentioned faster payments. Here in the US, you have the Fed taking a very market-friendly approach, inviting everyone to join in and propose. You saw MasterCard buying VocaLink to try to play this market here. How is it in Brazil? Is it like a top-down approach, or is like the market kind of the central bank inviting market participants to chime in and let's build this together? And is there a willingness to invest real money to improve the rails or new rails?
Well, from a regulatory standpoint, the answer is that the central bank is trying to coordinate this discussion. So they created this working group formed by central bank members and representatives of the markets to try to understand what would be the best way to treat fast payments in Brazil and try to come up with a regulation that is feasible to implement in a short time, I would say. So definitely there has been some coordination around that, and the idea is that the regulator will conduct most of the initiatives, not the market itself. but I believe they will still leave room for innovation and for the market to try to adapt in the best way. They are being very cautious with the regulation, not to kill innovation before it starts.
Yeah, I think it will. That will definitely be. Keep going. You got the mic.
They got play with the microphone.
Right. So I think the concept of proportionality is something that became very sedimented in the regulators' minds, both when you speak to the central bank and to the Brazilian SEC, the CVM. The idea that you should not prescribe medicine that is too strong for the illness is something that has come. So I think the central bank will lay down ground rules, but not the specifics, and will work together with market agents to get there. I think that's what I see coming. But I don't know what your opinion is, Larissa, but I think the central bank is really pushing for payments, for live payments. I think that's something that's going to change a lot over the next year.
No, totally agree on that. I think we're all going to see several different payment methods being accepted, and all the merchants and the central bank is pushing for that, especially because they want also to reduce costs for merchants in Brazil. So to have different alternatives is certainly a way to do that.
I have a question on payments, whether we're move on to that topic, especially on the merchant acquiring side. So we've seen a lot of entrants and a lot of competition in the last year or so. Seguro going public, Stone going public. They all seem to be competing on price, lowering emerging discount rates. I'm wondering what your thoughts are. Anyone who is kind of prognosticated about this, is this going to be just a race to the bottom? And where does it end up? Winners, losers. And then also, as those rates are coming down, a lot of these companies are looking at things like lending in order to find a more profitable business. Some of them have data, some of them don't, depending on their relationship with banks. So just if you look at that overall landscape, I'm wondering how you all see it playing out.
That is a very important question for public market investors currently, and it's something that I think there's a lot of heated debate on. Obviously they have the added benefit of anticipation of receivables, right? This isn't just purely a transaction processing business like it is in U.S., where you might get a little bit of float and then you get some sort of cost plus margin. I think it's going to stay heated for a while. I don't see any reason why. There's a glut of valuations that are being put out there to buy Seguro and Stone, and there's, like I said, a lot of excitement in and around Fintech in Brazil, and that has pros and cons. The pendulum is swinging pretty far in terms of excitement or exuberance. So the people running these businesses are sharp, they're sophisticated, we know them. And so, this is something that's top of mind for them. As they evaluate this race to the bottom on the core business today, what do they do with all their fixed infrastructure, and how can they build in ancillary revenue and profit streams? So merchant lending is an obvious one. Mercado Pago, Mercado Libre is launching Mercado Crédito. We know the guys who are working there. They're building their own closed loop, in effect, system where they don't look so much to the U.S. anymore. They actually look towards China and some of the mutual fund businesses that, for example, Alipay, Alibaba have. So, I don't have a crystal ball on this point. I would say that the guys who are running these businesses are sharp. and these low-end disruptors who are now gaining critical mass, 5, 10, 15% market share, they're starting to have enough seat at the table where the quick wins are probably going to start to fade against Cielo or Heiji in terms of just next generation distribution platforms. At some point the incumbents are going to react and react aggressively with price and distribution, and it's already happening. So who knows? As a growth stage investor, as I mentioned, we're looking elsewhere or kind of different plays on merchant acquiring, merchant processing than the traditional model today. Because there's certainly a lot of growth and certainly a lot of margin, but it's a question of how long those profit pools continue to exist.
When you talk, you mentioned underbanked. There's a huge population of Brazilians that do not even have access to banking. Are you guys targeting that population? Are you guys targeting the ones that, already have a bank account and are profitable and just can offer better service? Who is looking at that pool in Brazil, be it from a business perspective? Obviously, there's sort of benefits.
There are a number of companies trying to work with unbanked. I would argue that the population of unbanked in Brazil is not as high as people think. It's much more about being underbanked. People do have a checkings account or a salary account. What they don't have is access to consumer loans, credit cards, investment products, etc. The problem, we don't work with unbanked clients. I see that a frontier being explored by a number of companies. They still have to take advantage from either some government subsidies or investors that have a purpose that's strong enough for them to take very low returns on their investments. But that's likely to change over time with all the digital banks coming up. It's not going to be pretty as people think. I mean, a lot of people will blow up in financial trouble because they never had access to financial services, and that's a culture to be built. Financial education in Brazil is very poor. We all often have this discussion with our investors. We know for a fact that consumers are not very responsive to interest rate changes. So if you increase interest rates by 1 or 2 percentage points, it doesn't change anything. People will still consume the same product in the same way. And I know that sounds kind of ridiculous, but it's the way the Brazilian consumer behaves, and that is something that is changing, but it's not a reality right now. So financial education is a big problem for extending financial services to the end of the
There's not much of an economic incentive in Brazil to help the underbanked, sadly. It's more a government issue. The richest market in Brazil is lending, and the reason for that is the rates the Brazilian banks lend at. It's not uncommon for medium-sized companies to be able to get bank loans for perhaps 1.5% to 2%, and an individual perhaps maybe 5 to 10%, and you're all thinking that sounds pretty good, until we realise that those rates are quoted in months and not in years. So 2% a month means that an organisation's funding cost is between 28 to 30% a year. When you add on top of that government taxes, in fact many organisations in Brazil are working to feed the bank and to feed the taxman. That drives its own microeconomy. The default rates on loans in Brazil are amongst the highest in the world. And that's why the loan rates are so high, coupled with the fact that if you don't pay, then you get a dirty name, and 3 years later it's wiped off, and your slate is clean and you can start again. Until all of that changes, then that's going to be an immensely rich market, and the reason why the fintechs are attacking that, because let's be honest, if you can get a 30% return on your money with a minimum level of risk, it's not bad, right?
And I think so one of this is maybe that's mine.
This is certainly a concern for the central bank also, because then if you see in the agenda BC Plus that the central bank put together a few years ago, financial education is one of the pillars. As Sandro mentioned, we still need some cultural changes so people can benefit and use financial products better. But we have certain initiatives that are focused in the young bank population. So we have now some credit card issuers that are looking, for example, specifically to the population that lives in the favelas in Brazil. We have lending companies that are providing very short-term, small ticket loans to complement monthly salaries or help people deal with unexpected emergencies. So we have a few initiatives on this field that definitely need to go together with an increase in financial education.
Question. Terry gave his presentation on AI, and I think it's really to the big banks or banks that have 60 years of data, and then he was, I think, rebutted by the fintech side, which is with Focus, et cetera. But we never gave Terry a chance to say, well, who wins this battle over the long run? Is it the banks with the existing customers, the existing infrastructure, but limited by their legacy, maybe? And so curious. Long term, this is to some extent, let's say a battle, but a discussion between the established banks and the fintechs, and where does this go? Who wins this? Who wins this war?
Well, our own AI models are predicting that I will, so that's good. It is an interesting question, and there's space for everybody. There are advantages on both sides, and quite clearly having a whole set of history that we can learn from and use for predictive models is immensely valuable. Where it comes to customer relationship management, there are really two types that fit within the category. One is the banks increasingly moving towards a predictive model that is trying to help customers have a better experience, and those that realise that a machine's a machine and that actually a personal touch is going to make a huge difference, which is why private banks are still there and are moving more towards a human model. In my view, and this is more philosophical than anything else, I think as humans we will very quickly begin to understand over the next 5 to 10 years that we like each other, and that we should put down our social media, we should put down our predictive engines, we should start talking to each other, and as a result we create a better world that's driven by human interest and not by greed.
So you don't like talking to the IVR when you get called for that?
So I will just make a final. I have
just a little question. You guys talking about New York. I have studying the New York market as an immigrant part. So I'm seeing that we got over 2 million immigrants from South America living in New York. You guys as fintech startups thinking about that part of immigrants as over financial service, learn to build credit or in general. You guys are thinking on that part of the immigrators, or it's just thinking in Brazil market, Brazil style?
So we are a Brazil-focused company, so definitely not thinking about that. There are companies that do that in the US. A company called Opportune has been doing that for a while for Hispanic immigrants all across the country. There are companies that are very focused on the first steps of your credit history, so giving you the first loan, regardless of you being an immigrant or a national. So I think there are a lot of people looking at that market, but that's all I can add to that.
We operate in 7 countries. So our artificial intelligence capability is split between Toronto in Canada and Fortaleza in the northeast of Brazil. The models that we develop are applied across all of those 7 countries. In fact, our strongest interest is in places like Argentina, Brazil, and Mexico.
Menos do que tengo problema aquí. Quite recently, as you all know, quite recently, the Marriott chain of hotel was victimized by hackers who had access to private data of their guests. The question now is primordially to CEO Terry Boyland. My question is whether or not, using artificial intelligence, there is a system whereby we can neutralize hacking. If not, whether using artificial intelligence, we will have that materialized in the foreseeable future, applying to banks, to anything. Thank you very much.
It's an excellent question and a very important one. This is becoming more and more of a problem. And the Marriott hack is certainly one of the largest that's ever occurred. And you'll be pleased to hear that in fact there are a number of artificial intelligence solutions that are helping with that problem. When it comes to hacking, it's typically viewed as being what we call a classification problem. So we look at the accesses that come into a machine, and are those accesses fitting within a determined category that we've seen in the past. So we learn from the previous experience what is typical for a particular user or for a particular login, and when we see an anomaly within that login, that's then classified as being something which requires an inspection. And these systems are getting better over time. They're not perfect yet, and certainly they're not deployed everywhere, but it is the view that using artificial intelligence is a far easier and faster way for us to be able to determine the classifications which sit outside the norm for an access to a system. So yes.
Just to complement on that, this is definitely a point of concern for regulators in Brazil. So the Brazilian Central Bank does have rules around cybersecurity and impose several compliance measures for all of the participants in the financial industry. And the Securities Commission is going in the same direction and decided to adopt some rules around cybersecurity for the ones playing the capital markets field. So this is definitely on the radar of the regulators.
Another question that something that you touched on the panel, just the eventual or potential partnership between the established banks and the fintechs. Is it starting to happen? Does it make sense for it to happen? You know, the banks have the data, the fintechs have the technological capability and the go-to-market expertise. Are we starting to see it? And if not, do you expect we will, and when?
Yeah, I'm gonna try that. I think we're starting to see them. I believe that it's very nascent yet in Brazil. Banks mostly look at, we have a couple partnerships with banks, and we've been working to get more involved in these. But I think banks still look at fintech companies majorly as either a paid code of user experience or a distribution channel for their existing products. We are starting to experience partnerships where the banks see us as an asset they can allocate capital into, which is a lot different than the two prior ones, in my view. And I think that's going to pick up over the next few years.
With regard to artificial intelligence, there's a difference. So certainly with fintechs not in the AI space, there is partnership going on. But just to give you one example, there was a company called Level 6 that had 11 employees that had been going for 9 months in Toronto, and TD Bank bought them for $100 million. That's how afraid they are of what this stuff can do.
I think we are reaching our time limit, so I would like Ted for having us here together, for the opportunity to talk to you. I'd like to thank Sandro, Alex, and Terry for all those comments. It was very exciting to be here and listen to you, and I would like to thank you, the audience, for being here today.